Hello, everyone. This is the Keeping It Real in Real Estate show, and I'm your host, Kathy Blakey. I'm a realtor with Century 21, a marketer, entrepreneur, and nature enthusiast. In this podcast series, I'm going to take you on a journey as we explore topics in real estate, including the market, mortgages, common inspection issues, sustainable future, and more. Are you a homeowner? Future homeowner? Do you like saving money? Enjoy healthy living? Then this podcast series may be for you. Stay tuned as we go deep into these topics. And don't forget, subscribe, like, and share. When buying a home, there are so many things to do. I know it. Everything from getting your lender the most recently requested documents to that never-ending to-do list, along with inspections and more. One of those things on your list is getting a homeowner's insurance policy. You might be tempted to just get any policy and check off the box to consider it done. In today's episode, I hope to give you insight into the types of policies available, along with a few short stories about a few homeowners that were glad they had the right coverage. Stay tuned for more. Today I'm being joined by Rick Martin with Liberty Mutual. Rick, can you take a moment and introduce yourself?
Yes. Hi, Kathy. Thank you very much for having me do this. I've been with Liberty Mutual 37 years. I am licensed in Pennsylvania, Maryland, New Jersey, Virginia, and Delaware. So I can help customers in all of those states. I'm an expert, I believe, in property and casualty insurance. So I believe I can help customers with their insurance needs.
Well, that certainly is right up our alley here. The podcast is geared towards homeowners, future homeowners, and really anyone who wants to learn a little bit more about the home buying, selling process as well. So once a buyer has a contract on a home, one of the very important steps that they need to do is get homeowners insurance. So can you tell us more about what homeowner policies are available and how would a buyer go through getting a quote?
Sure. A homeowner policy is required. Your mortgage company is not going to approve your loan until they have a policy in place. So it's important you start that process getting a homeowner policy. The different types of homeowner policy. So if you're buying a home that you are going to live in, that is a homeowner policy. So that covers the outside structure, covers your personal belongings, covers liability in case you're sued out of your ownership for that. It also covers you for loss of use, where if you had a loss and you had to live somewhere else, that homeowner policy will cover you for that. If you're buying a condominium, that's a different type of policy. It's a property, but the master policy of the association would cover most likely the outside walls, and you're responsible for the inside walls. So you'll have less structural coverage, but you still need personal property coverage, you still need loss of use coverage, and you still need liability. Okay, then the last property coverage would be a landlord policy. So if you're buying an investment property, you'll need what's called a LTR, or long-term rental policy. And that'll protect you as opposed to loss of use. You would get loss of rent if there's a loss. You're not usually worried about personal property in a situation like that because the renter will have his own personal property that he'll bring in. And so that person will need a renter's policy, which is another topic completely. But there are the three type of major property policies you would need when you purchase a home.
That's great. Good, useful information. How about endorsements? What kind of endorsements would they want to get along with that homeowner's policy?
Well, again, it's your type of ownership. On a standard homeowner policy, a single-family home or townhouse, where you're responsible for the outside walls, protection, and also your own personal belongings. There is restrictions on all of them, by the way. For example, jewelry, silverware, guns, some collectibles have restrictions. It's not really necessarily coverage on the homeowner policy. So, for example, jewelry only has a $2,500 limit for theft. So if your jewelry is stolen and you don't have a jewelry rider on there, you will only be covered up to $2,500. So it's important you schedule your jewelry. And also when you schedule it, it protects you from loss, which means if a stone falls out of a setting or you lose a diamond earring. But one of the most important coverages for homeowner endorsements is you have replacement cost. It's very difficult to know what it would cost to rebuild a house because if we get 10 builders out, they're probably going to give us 10 different prices. So you want to make sure that you get an estimate of what it will cost to rebuild. It's going to be a guesstimate, basically. And then you have a cushion, basically, of expanded replacement cost, which will give you a 20% up to, sometimes they're up to 50% safety net, so to speak. An example of that, if you insure the house for $200, then you have this replacement cost on there. You actually have $240 or $250, depending on the type of endorsement you get for replacement cost.
Yeah, I could see how a home maybe that's built years ago, all brick or all stone, I can imagine that the cost to rebuild something like that might not be as inexpensive maybe as building something that's, one of the newer construction.
Correct. And it's called functional replacement. Mm-hmm. So you can actually have an older home built to today's building standards, like drywall and trusses and 2x4s, as opposed to the solid masonry foundation that you might see. That'll cost you less money on your homeowner policy, but you won't really be able to replace the house doing it that way. So, but yes, it is difficult. You don't want to be overinsured because that's a waste of money, because the insurance company is only going to pay to rebuild, but you don't want to be underinsured either, because then you won't be able to put yourself back in the position you were before the loss.
So before our podcast session today, we were talking about a couple of interesting stories, and I think now might be a good time to talk about those.
Sure. I had a client who just got engaged, and so they called me up, and I added their engagement ring to their homeowner policy. I wasn't sure if it was part of their honeymoon or what it was, but they went on a mountain biking tour or trail, and she must have hit a pothole or something, and it kind of jarred her finger, and it actually pulled the ring off her finger and hit one of the bicycle spokes and catapulted off into the weeds. And so they searched for it, of course. They, of course, could not find it. It was a tragedy because it was a brand new ring, less than a year old. And that jewelry rider covers them for that. It covers them for loss. It wasn't stolen. It wasn't burned in a fire or something like that. It just was lost. And it's probably still there in the woods somewhere, but they were able to get a new ring to replace the one that was lost. So that's why it's important to, if you have some nice pieces, you want to get them added to your homeowner policy.
So is that considered an endorsement then?
It is. It's called scheduling your jewelry is basically what it is. And it's a line item on the policy. So it'll actually read, 14 karat gold, such and such a quality in carats, that kind of thing for the ring or whatever item you actually put on there.
Okay. Well, thanks for that. That's very helpful. So when a homeowner or future homeowner is shopping for a policy, what are some of the key questions they should be asking their insurance agent, or really that the insurance agent should or could be asking them?
Sure. Yeah, that's important because, every home doesn't and every person doesn't need the same thing. You want it to really be customized to what your needs are. So we touched on the rider thing for jewelry and other special items already. So your agent should be asking, do you have an engagement ring? Do you have some jewelry? That type of thing. Another thing is water backup coverage is something that is not a part of the policy. And it covers you from water backing up into your home from a plumbing fixture, whether it's a shower, a toilet, a sink, or even your sump pump or your sump pump failure. That water enters your house through that drain and causes damage. So you might not necessarily need it if your house is above grade, you don't have a finished basement, but you might need it if you have a finished basement, because then you don't have coverage if something happens where water enters your house through a drain or the sump pump failure down there. Another important thing, probably the two most important riders or endorsements you should have on your homeowner policy, is replacement cost on structure. So it gives you the guarantee that your house will be rebuilt. Now, there is a percentage involved there. Most of the times it's 20% or 25% over the number appearing on the policy. But then also replacement cost on contents. That is all your personal property. If you don't have that on there, the insurance company will depreciate your personal property. So, for example, you have a TV that's 5 years old, they'll give you the value of a 5-year-old TV. Where if you have the replacement cost endorsement, you will get a new TV, what it would cost to replace at today's prices. So very important. Those are some of the things that should be asked about. Because you don't necessarily want apples to apples, because that's not always good. You don't want a cookie cutter policy. You want it to fit your needs.
And how about deductibles?
Oh, deductibles. Yes, that's another thing I see. Deductible is you should have a fair cost to the deductible. So, for example, if you take a $5,000 deductible and you're only saving $50, that's somewhere in the neighborhood of a 100-year break even. I don't have the math down, but you're not going to get the value out of $50 on a $5,000 deductible. So it's important, just because your homeowner policy is inexpensive, it might be because you have a gigantic deductible, and that's not necessarily what you want, because it's hard to put out $5,000 if you have a claim. Another thing I'm seeing more and more of is you'll have a flat deductible, say $500, and then you'll see something like a wind and hail deductible or hurricane deductible in addition to that. So what that means is if the claim is caused by a wind event, the deductible will be a percentage of your coverage. So if you have a $250,000 house and you have a 1% wind and hail deductible, the deductible will be $2,500 as opposed to the $500 that's appearing on your policy. So it's important that you take a look at that, ask the agent about it if they have such a thing. And then another one is the hurricane deductible. That's as if there's a named storm. Generally, that's a 2% deductible is what I'm seeing. And if it's a named storm, the deductible will be 2% of your house value as opposed to the flat $500 or $1,000, what you might have.
So you said a named storm. So
Correct.
if a storm gets large enough to be called by name, then it has a certain percentage.
That is correct.
That's interesting.
It's called a hurricane deductible as opposed to the wind and hail.
Okay. All right. And now how about flood?
Flood. Well, flood insurance is not covered by your homeowner policy. So if you are in a flood zone, your mortgage company is going to require you to have flood insurance. The only place you could get it in the past was through FEMA, Federal Emergency Management Association, or the federal government. But now there are private flood insurance companies now where you can actually shop that. Flood is, by definition, is a loss caused by rising water. So it could be from a river, it could be the ocean, it could be a bay, it could be a creek, and it has to involve 2 or more residences to be considered a flood. So that's just one of those rules that's in there. And it only does cover flood. It covers nothing else. So if there's a wind damage and water gets in your house that way, then it's your homeowner policy. If it's a rising water, then it would be the flood policy.
So if you have a storm that causes some wind damage and water damage due to flooding, that could be 2 separate claims, 2 separate policies. That
is correct. It would be two claims. The flood would be handled by the flood company, whatever one you're using, and then any of the wind damage and the water entering your house from rain would be considered also part of the homeowner claim, not the flood claim.
So we were also talking a bit ago about an interesting plumbing story. So tell us a little bit more about that.
Sure. This was kind of an interesting case that happened to one of my clients. I wrote a homeowner policy on this person, and I gave her the Home Protector Plus endorsement, which gives her replacement costs on contents, replacement costs on structure. It gives extra jewelry coverage and that kind of thing. It's all rolled into one package. And she went traveling to Europe for about a 3 or 4 month period, I think it was. And so she had someone house sitting, so to keep an eye on her house. And that person was house sitting, the pipes froze. And they called a plumber to try to get that taken care of. And the plumber used a torch, believe it or not, to try to thaw the pipes out. And unfortunately, it was an older home, and the flames from the torch caused some sparks that went up in between the walls, the outside wall and the inside wall, and apparently smoldered for hours. The plumber left. He thawed the pipe out. And about, at some point in the future, the slow combustion broke through and got more oxygen, and the house burst into flames. Fortunately, yes, it was, I can't imagine. Fortunately, the person got out, so there was no injuries. But by the time the fire department was there, the house was fully engulfed and it was a total loss. So it was caused by the plumber. So the insurance company, who happened to be Liberty Mutual at the time, subrogated against the plumber's insurance company. And I got called in to testify in the court case, which was kind of scary. It's never happened to me before, where I had to, go in to be deposed. And the attorney for the insurance company of the plumber asked me why I had so much coverage on this house. And so I told the attorney, I said, well, look, I said, if I was insuring you, wouldn't you want me to cover you the same way?
Yeah, absolutely.
So that's what I told him. So he had nothing to say about that. But that's the importance, of getting the right coverage. You don't want to be overinsured. You don't want to be underinsured, but you want to make sure you have the right coverage. So God forbid if something like that happens, you are put back in the position you were before the loss and you can get your home back.
Yeah, it's one of those things kind of like life insurance you hope you never need.
Correct. That's a great segue to the other types of insurance you might need for home.
Why don't we go ahead and segue into there? Okay.
Well, there's a couple different policies that are confusing to a new home buyer, or especially a first-time home buyer. We have the Homeowners Insurance, and the mortgage company is going to call it hazard insurance. So sometimes that's confusing. It covers for hazards, basically, but they're the same thing: hazard insurance, homeowners insurance. And then you'll have title insurance. Now, what the title insurance does is the title company does a title search to make sure that the ownership is clear or the title is clear. So this way, if something happens where there is some kind of hidden lien on that home, this insurance will pay that off so you can stay in the home and take care of that lien. So that's done by the title company, but you need to have that. You have to pay for it. Then there's this other coverage. You'll see mortgage insurance. Mortgage insurance it could be two things. There's one called private mortgage insurance, and that's actually insurance for the lender. The lender, if you don't put 20% down, they put this insurance policy that you have to pay for to protect them if you default on the loan. So you want to pay that for as short a period of time if you do have to do that, because sometimes you have to buy a house less than 20% down, but you can refinance too. At some point, if your house goes up in value, and as you pay the house down, you'll be able to get rid of that, so you won't need it any longer. But that's something that's there that in case you don't understand, that's what it's there for. And then the final thing is mortgage insurance or mortgage protection insurance. And there's two places that you might see to get it. Sometimes the mortgage company will try to sell you that. I don't like that type of policy because the mortgage company is the beneficiary as opposed to maybe your family. So if something does happen, the mortgage company gets the loan paid off, but you may not want to pay the loan off. You might want to just sell the house. So it takes away some of your flexibility by buying it through the mortgage company. The other problem with it is it's a decreasing amount of insurance. So as you pay down the loan, the protection is reduced by the amount of the loan, but you're still paying for the same price.
Oh.
So
that doesn't sound fair.
Yeah, it's not a very good deal. Yeah. It's best to get it through your insurance agent if you need the mortgage protection.
Okay, so so that would be offered along with the homeowner's policy, correct, something like that.
Okay. This way you can customize it to what you need. You might not need the full amount of the loan because you've got other resources. You just want to protect for a certain period of time, and so there's again, just like the homeowner's insurance, it should be customized to the customer. It shouldn't be just a cookie cutter insurance for whether it's the homeowner's insurance or your mortgage protection insurance.
Well, thanks, Rick. That's really helpful because there are many types of insurances at the time of the buyer reading through their closing disclosure and trying to understand, why am I paying for 3 different insurances?
Correct.
And that helps to clarify that. So the one that we're talking about with the wind, fire, injury, etc., that one is all the homeowners or hazard insurance, and it is required by the lender in most cases. Now, what if you don't have a loan?
Yes, it's not required by government, like car insurance. You have to, if you own a car, you have to have at least liability insurance and personal injury. Homeowner insurance is not required. So you can conceivably buy your house for cash, not have a homeowner policy. Don't recommend it because that's a large investment, not protected, but it is there that you don't have to buy it. So
yeah, some of the benefits to why you might want to buy it: protect your home.
Correct. If there's a fire, even small losses are covered. Personal property losses. Okay. Also, the biggest problem or one of the biggest pitfalls it could be is liability. So if you are sued for some reason, you have a dog and the dog bites someone, or, you are on vacation, you knock a flower pot off the balcony and hit someone down by the pool at a hotel and they're hurt from that, your liability on your homeowner policy covers you for that, believe it or not.
So you just bring up a good point that I didn't actually have in my original list, but dog breeds.
Yes.
Tell us about that.
The dog show was on last night. Matter of fact, my wife and I were watching it.
Yeah.
So,
as it pertains to homeowners insurance.
Exactly. Yes, there's, homeowners insurance companies are fearful of dog bites. And so there might be some restrictions on getting homeowners insurance with some of the companies, or they may charge you a little more if you have a dog, or they might have some restrictions. Do you have a fence? Had you had a dog bite in the past? Most insurance companies don't charge you more for having the dog. They just want to know about it. And some won't insure you at all if you have some of the what they call the vicious breeds, which would be the pit bulls and the Presa Canaris is this big beastie dog. There's Akitas are on that list. German Shepherds, Dobermans are on that list. Huskies, believe it or not, are on that list. So you'll want to know, your insurance company is going to want to know you have those if you have one of those pets, but you generally can find insurance. You don't want to not disclose it, because if they find out by doing an inspection, they might cancel your policy for non-disclosure. So you don't want to mess around with that at all.
Okay, so you are a buyer and you have a policy lined up. You've done your research. You've got a great agent. You know what kind of policies, what endorsements you need, and you're just heading to closing at this point. How is your policy going to get paid?
Okay. Yes. When you're buying a home and you're going to closing, your agent will send the copy of the policy and an invoice to the closing agent, whether it's a title company or an attorney. And then at settlement or the closing table, that will be paid in full for the year. Okay, so your homeowner insurance will be paid in full for the year. And I get questions sometimes where the client will call me and says, well, why are they taking money out of my mortgage? Why am I paying for it now for the homeowner insurance when it's paid in full for the year? Well, what's happening is the mortgage company has to build your escrow account to pay next year's homeowner insurance policy and also taxes as well. So the escrow that you'll see will take 1/12 of your homeowner policy and 1/12 of your taxes to pay next year's homeowner policy and tax bill.
Okay, so part of the mortgage payment then is going to include the homeowner's insurance and the taxes. I always see that that's pretty common, along with sometimes mortgage insurance premium. Correct. If they have it, HOA fees if there are any. Those are all kind of combined together to be the mortgage payment. And why it's escrowed, most lenders do require it, and that is so that when that bill comes due, it can be paid. In case you happen to overlook it, boy, wouldn't that be devastating? You overlook it and then something happens and you have no coverage. The bank's out, you're out. Not a good thing. So that's why the money is escrowed in advance and set aside so it can be paid by the lender and becomes their responsibility at that point.
Sure. Yes, and that's reminds me of something that happens frequently. A lot of times your mortgage company will sell your mortgage to another mortgage organization, and they don't let us know that happens, us meaning the insurance companies. And so we'll send the bill to the wrong mortgage company if you don't tell us. So it's very important that if your mortgage gets changed, to let us know, because then we'll send you the bill. Usually on the second bill, second or third bill, you'll get one in the mail. And it's because we sent it to the mortgage company. They didn't pay it because they don't hold your mortgage any longer. So it's very important that you let us know.
Yeah, so if you get second and third notices, right, don't disregard them.
Exactly right.
So we've been talking a lot about buyers, and something just came to mind about sellers, and it actually happened to me kind of personally. When you sell your house, you actually need to call your insurance company and let them know you sold the house.
That is correct, because there's a couple different things there. There's, the mortgage company, remember, has paid your homeowner's insurance for the year. So if you sell your home mid-year, you're due a refund. So that's, half your
that's one
premium.
Really good reason.
Exactly. So you want that money back. It is your money. The money in your escrow account is your money. So you want to call us and let us know so we can, send you your money back.
So Rick, next let's talk about claims. A couple questions. What if the property that you're purchasing has had numerous claims?
Well, that could be maybe something you want to look into to make sure there isn't an inherent problem with the house, obviously, that causes reoccurring claims of the same thing. Like, if there's constant water claims, for example, there could be some type of inherent problem that hasn't been corrected. some insurance companies will rate the policy based on the location, how many claims were there. So if that property had a bunch of claims, some insurance companies might not even write that policy. Other companies don't necessarily care about that. They just care about claims by the owner. So that's why it's important to shop. You want to talk to somebody who can rate for a bunch of different companies for you. Mm-hmm. And if you're in a situation like that where you've had claims or the property's had claims, there's a good fit. Now, fortunately, I can write for 7 different homeowners insurance carriers, and so I can normally find a fit for people. But it is important. Claims can affect you in different ways. This is a good time, I guess, to talk about when should I put in a claim, maybe?
Yeah, let's go there.
So you don't want to put in small claims because, like as I said earlier, the claims can affect your rate. And then also if you have too many, the insurance companies get nervous and they can actually set your policy up for cancellation. So you don't want to use claims just because you need a new storm door or something. It's really designed to protect you for something that happens to your house where you really need the help to get that taken care of. Whether a wind blows your roof off, tree falls on your house, a fire, pipe bursts where water can go everywhere. So it's important that you don't put in the small claims because it can affect you. That's why it's good to have a little bit higher deductible, possibly something that's comfortable. 500 or 1,000 is usually the norm. And then this way, you don't put anything in over 1,000, say, or even a little more, because you don't want those type of claims to affect your rates and possible ability to get homeowners insurance. Because if you had a claim, it's the worst time to shop, actually, when you have some claims.
Oh, okay. So talking about claims and just thinking about, where you have your policies brought to mind about bundling. A lot of times what I do is recommend the buyers check with their current provider, whoever has their auto, for example, or their life insurance policy. I figure that's probably a good place for them to start getting quotes. Rick, what do you think?
Yes, it tends to be a good place to start because you most likely have a relationship with that person already. You might work with them over a few years, and chances are they might be able to have something for you. As I touched on earlier, bundling can be good or might not always be good. So we talked about the claim situation. Some companies will have claims impact your rate more than others, and it depends on if it's the claim at the property or a claim that you had in your previous property. So they handle them different ways rate-wise. So it's important if you had a claim in the last 5 years that you might want to shop with other companies to see if you can get a better price for your property. Generally, claims don't affect other policies. So like if you have a homeowner claim, it doesn't affect your auto rate, for example, or your umbrella rate, or your rental property, or your vacation home. So sometimes you may need to have them with all different companies, believe it or not. And the bundling discount really, doesn't come into play. I have clients who have all their stuff with different companies, believe it or not, and they save money that way, even though bundling with one or the other company, get a little extra discount, but the pricing was not worth it to have it all
I see.
with one
So it's
company.
a discounted price off of their prices, but if their prices weren't the best prices to begin with, then that discount may not really matter.
Correct.
Okay,
There's companies out there, like Umbrellas is one, $1 million umbrella policy, for example. There's a company that just writes standalone umbrella policies, and their prices are terrific. And so you might get a bundle discount on your auto by having your umbrella with your auto carrier, but you're paying an extra $100 and some for the umbrella, and the discount is $20 on your auto, and where you can get the umbrella cheaper. So you do have to take a look at all that kind of thing.
Well, let's go ahead and talk about umbrellas for just a minute. We talked about endorsements. We talked about homeowners policies. If a future homeowner, is purchasing a homeowner's policy, do they also need an umbrella?
Again, it depends. The umbrella is a kind of a net worth type of thing. You want to have enough protection. Like if you are sued, it is first off a scary situation because now we're getting attorneys involved and you don't know where it's going to go. It can really damage your financial health. So it's important to have enough liability. So an umbrella basically is a policy that covers you for liability over and above your base policies. So, for example, in auto, you have a certain limit for liability, say $500,000, say. And then your homeowner, same thing. You have $500,000 liability. If you have an umbrella, $1 million umbrella, this sits on top. So you actually have $1.5 million coverage to protect yourself from lawsuits. I have a story which was kind of scary that happened to one of my clients. He lived in a townhouse, and it was one of those townhouses. There were 6 of them in a row, and the gas meter was in front of his house. Mm-hmm. So, coming out of the ground, those meters you see. And somehow he drove his car into that gas meter.
Oh, my goodness.
Caused a fire, as you could probably imagine. And it caught fire, burned his house and the other 6 townhouses down.
Okay.
All right. So the insurance company, Liberty Mutual covered him to fix his house. And then the insurance companies of the other 5 owners covered them for their house. But then, of course, since it was caused by my client, the other insurance companies had their hand out to try to get their money back for the claim. As I said earlier, another story that's called subrogation, where the insurance companies will try to recoup some or all of the claims money they paid out for the party who was at fault. So you can imagine 5 townhouses cost a little bit of money to replace. So the $1 million umbrella came in very handy there.
Oh my goodness. Okay.
So that's some of the things. That's a fluky type occurrence, but those big liability claims do happen. And to not have an umbrella when you may need it, that might cost you $300 a year for $1 million worth of coverage, to me actually is foolhardy. So
again, hope you never need it, but it's there if you do.
Exactly right.
Yeah, one of those coverages. Well, thank you, Rick, for joining us today. So much appreciated, all the great insight and stories. If you don't mind, just recap with your contact information and how we can reach you. Sure.
My name is Rick Martin. My office is 131 Continental Drive, Newark, Delaware. So it's right across from the Christiana Hilton near the mall. And you can also reach me by email, rick.martin@libertymutual.com. And my phone number is 302-444-9103. So any of those methods, I'm available, and I make it a habit of answering my own phone, believe it or not, after all these years. So if you call me, I will answer if I'm not on the phone, or I will call you right back. So I'll have Rick's contact information in the episode notes. And if you need any assistance with homeowners policies or any of the other insurances, get in touch. And he also mentioned which states he's licensed in. Rick, could you remind us of that? Yes, New Jersey, Maryland, Delaware, Pennsylvania, and Virginia. So I can help people in all of those states. Okay, awesome. Thanks again. Thanks for tuning in to this episode of Keeping It Real in Real Estate with Kathy Blakey as your host. For more information on this episode or others, visit www.keepingitrealinfo.com. There you can find information about becoming a guest speaker, episode notes, and contact information for the guest speakers. You can also connect with me on social media by using the key terms Kathy Blakey Realtor. Find me on Facebook, Instagram, LinkedIn, or YouTube. If you'd like to subscribe to this podcast, you can find it on iTunes, Google Play, Spotify, and more. Thanks for listening. As a disclaimer, this show is not intended to be a replacement for professional advice. For specific issues related to your real estate transaction, please consult with your qualified realtor, mortgage broker, home inspector, or real estate attorney. Thank you.